Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, August the 18th. The year's 2022. Let's talk trading. Passing the prop firm test, part 3. These videos are for educational purposes only. Your results may differ from mine. Okay, we've been talking about passing the prop firm test, and there was a trader on Reddit that asked about it, and then I got some questions that I answered yesterday. So I want to dive into the whole idea about the horizontal lines and trading and what to do, et cetera, et cetera. So this is the template we use to trade the wall mall. Here, let me show you the indicators. Main indicators would be the sweet spot's gold, which puts out the horizontal lines spaced 10 pips apart. And then we've got TROHL, which puts the previous hours high and low in there. And in that particular indicator, you could set this to current and or whatever other chart period you want to look at. But for the most part, I like to look at the previous hours high and low. And then the other one is the HL5, which will put the current and previous days high and low in there. And so you can see we've got these horizontal lines on the chart. And basically, if you trade with the H1 candle color at the horizontal line in the direction of the cross, usually you can pick up a pip or two. Now, does it always work? Of course not. And that's why we have our stop losses in place. But for the most part, you can make some nice little gains. And so you can see here, there's yesterday's high, here's yesterday's low, and then these lines delineate, and that's just from the show the period separators here. So this is all today between here, and this is yesterday. So you can see here, price tested the previous day's low and broke through once, broke through twice. You can see here on today's open, after it broke through, it came back to the open and ran up and ran down and ran back up, ran back down, ran back up, ran back down. So just trading the those horizontal lines. In fact, let me turn off the sweet spots indicator just for a second here. And you can see the price action on or at those lines. So if you simply had the previous day's high and low, along with the current day's high and low in the opens, you can see the price action. So here, that would have been your first trade. That would have been a nice winner. Now, if you want to say take it coming back, sometimes that's okay. Sometimes, price is going to stall there and the sellers will push back down. But here, it pushed through the open. You take that crossover, made a high. Didn't break the high, so there would have been no long trade here. Not yet. And then here at the open, in fact, I was kicking myself for not taking this one a couple of hours ago. I was still half asleep. I looked at it. In fact, Walmal's on vacation. I was talking to him. I go, yeah, I'm kicking myself for not going short at 46. At the time, I think I could have had 10 pips, but you can see here now, it was almost good for 80 pips if I would have hung in the trade. So now we've got the start of a new hour. We're coming off that low. And so a lot of traders would wonder, what should they do? So just basically taking these trades at these horizontal lines, trading with the candle color. Now, if we turn the sweet spots back on, now you can see these horizontal lines for the wall method. So we're looking at H1 here. If we just drag the chart out, and maybe we'll go all the way down to M1. And I learned a trick. If everything is squished, if you go to the monthly and then go back to the 1 minute, then things don't get so squished. So you can see here we had the open, we haven't hit 70, and we haven't hit 60. Now we're moving the day's low down. And you can see we basically broke out of the previous hours low at 67.7. Now the problem is, like on this particular broker, it has a spread, so sometimes you could see maybe a pip, sometimes maybe not. But that's what happens. So you can see we just pushed down through that low again. And we just have to wait and see what happens here. And remember, trading is, about 98% waiting. 1% of the time you're entering, 1% of the time you're exiting. And really, to enter or exit a trade is only a couple of seconds. You click the mouse, you get your confirmation. And everything else is waiting to enter, waiting to exit. So in this particular case, you could literally put in pending orders, buy, sell. Now, I would be kind of skeptical to sell. Reason being, you can see here we got 114 pip range. We're right at the bottom, right at the low, 116 pip range. Price could expand that range. In fact, let's look at the daily. So we're right around the last 3 days, 5 days. You can see here, we're right around that range. And we had a big day 6 days ago. And then we had a couple small days in there. But, if you look to the left, you can see all this pushing up right here. If you look at where price is. So could it come down to 1900? I don't think so. It could. I mean, anything can happen. Anything's possible, right? But I don't see the statistics lining up for that. But we'll just have to wait and see. There could be a news event come out. Anything. And so you see here it bounced off, came through. Now we're at the 70. So if you had your pending order sitting there, you'd already be in that trade. And depending on whether or not you have to account for spread, well, if you had bought it at 70, even with spread, you'd be up a pip now. So it broke through the low. Then it broke through the 70. So you could have possibly jumped in here. The previous hour's low. You'd be almost 3 pips to the good from the 70 line here. So, part of the idea, though, with the prop trading firms, once again, it's really a matter of managing the risk and getting the position size right. So when you have a win, you have a significant enough win. So let's just say you're trading a $50,000 account, and you could lose up to 2,500 in a day. Maybe if you position sized at, say, 5 lots, $50 a pip, you need to make at least 500 a day to pass the test. Actually, you only need to make 250 a day to pass the test because you have 20 days, and 20 times 250 is $5,000. So maybe you could even drop the lot size down to maybe 2.5 pips. So if rather 2.5 lots, $25 a lot. So if you could make $50 on a trade, and you could get 5 wins, that's your 250 for the day. So at $25 a pip, 2 pips is 50. Now on the downside, and this depends on you as a trader, what is your winning rate? Do you win 1 out of 2 trades, 2 out of 3, 3 out of 4? So for example, maybe with a 2 pip target, you might have a 4 pip stop loss. So that way you would lose $100 on the trade, and you go to win 50. Now most people say, well, if you're going to do that, you're going to lose, and that's what the traditional trading talk's all about. But if you're in it at these lower levels, meaning you're only looking to pick up a couple of pips, so long as you have a method of entry that gives you that opportunity to take 2 pips, more often than not, then you should be doing okay. And if you look at the ranges here, you can see these cross these horizontal lines by 2 or more pips in almost every case. So for example, here, the last hour, if you went long at 10, you had a chance to get 3.3. So right there's your 2 pips. Then if you went short, you could have gotten a lot more. And so that's kind of what we're looking for here, is to have opportunities, every hour to take a couple of pips. And this is all statistics. So there's really no thought involved in this. The only thing you have to do is figure out, your win rate, and then adjust your position size. So if, let's say you win 3 out of 4 times, so that means you'd be basically 1 trade ahead, because 1 loss is going to wipe out 2 trades, if that's your average. But maybe you get lucky. Maybe you get like 4, 5, 6 in a row wins, and then it's time to take a break, because you might get a little overconfident and enter that 1 trade that wipes you out. So right now, there's 5 pips. 5 times 25 is 125. You're halfway there. So, fellow traders, I don't know. Let me know if you are in a prop trade evaluation, or if you're thinking about getting into one. It'd be interesting. Let me know what I can do to help. And when you are sitting down trading, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. And remember, please click the like button on the YouTube video, so maybe they'll move my videos up. This is TheRumpledOne, over and out.